Hi, welcome to the Market Alert for Tuesday, the 8th of December 2015. Starting off in the 5-minute chart, yesterday you can see that the market was sideways for the first 20 minutes. We then had a signal, and the good thing about this signal, as it was marked up, is that the entry price is actually below this support. And as I've said in the Market Alert for Monday, the market's likely to be quiet after the first hour or so, because there's nothing to move the market. There's no major news until Thursday of this week. There's not a single Federal Reserve member out to pump up the markets. So after the first hour, 2 hours, or up to the 4:30 cut-off period, that's the best chance you've got of making any points. And also there is the chance that the market will trade sideways also for the duration of that first period of trading as well, because of the lack of news. But yesterday the market managed to come down and fill this one and then continued down. Again, you see the market drive through the 17,700 level here, and then there was a second signal, and then down to the 17,650 where the market stopped. Now as the market drove through here, you can see the market starting to find support. So again, going back to last week's trades and videos, you'll see how we could have used a trailing stop to lock in profits. The market comes back and stops this trade out with 51 points. But down here, there are 87, using this as the next psychological level. And it's at this time when I sent out the email to say, be warned, the market's likely to go quiet, having moved down this 100 point move in its range. And therefore the market did become quiet. And as I've said on numerous occasions in the Market Alert, and I will say it again, if you've made money in the first part of the session, forget the second part. And as I also said in Monday's Market Alert, the market's waiting for news. It's likely to trade sideways in the evening, and that's precisely what it's done. There's only one caveat to that, and that is if the market's sideways in the first part of the trading session, it will move in the second part. But if you've made money in the first part of the trading session, and that was a lot more than I would have expected, given that the market is waiting for news during yesterday's session, then it's a very easy decision to make. You just stand aside, and you can see there the market traded barely in a 50-point range, and the first trade of the evening session, had you taken it, resulted in a loss because the market had already gone into this sideways move, which of course I did warn about. Today hopefully we'll get a bit of movement in the first hour of the session. There is some weakness in the background, which we'll look at in just a moment, but also to let you know I will not be trading the second part of the session tonight, as I never do on a Tuesday. I am out with my wife on a Tuesday evening dancing, so ballroom dancing, that is. Nothing too energetic, so I won't be at my desk this evening. So just to remind you of that. If I see anything that needs to be notified, I will certainly drop you a note. But like I've warned, and it's slightly becoming repetitive, I know, but the market is waiting for news on Thursday. In the daily chart, you can see there the markets started to reverse yesterday, and I thought as the momentum gathered to the downside, I had a look at this before I sent a note out, see if we got a chance of actually going back down to here. But then there's just not enough geopolitical news or momentum, because I knew the market was likely to stop at that 17,650, which it did. But there is weakness here. Notice that these highs are the market's really struggled, and this is the high for the overnight, and it's moving lower as well. So taking out the low here, we'll see the market come back down to the 17,447 if it can gather some sort of momentum there as well. What would be handy for the Fed, if they're looking for an excuse to not increase interest rates, is for this market to sell off sharply as well. So again, we'll wait and see what happens with regard to that. That's, if they are looking for an excuse and to sort of retain some sort of credibility, we need an August the 24th in order to allow them to say, actually, the market's now lost a lot of value and we don't need to raise rates. So we'll see. But again, you have to think one step ahead, because, as I've said before, we live in unknown times. They're unprecedented. We've never been here before, where the market's been pumped up with trillions of QE money, borrowed money, debt, and which is never going to be paid back at this rate either, that's found its way into the market, and the traders have used it to make huge profits and huge bonuses as well. Right, news wise, what have we got today? Very little at 3 p.m. We've got the nicer GDP estimate. There's no forecast with this 0.6 before, and the job openings both at 3 p.m, both medium impact, and the job openings is shown to improve there at 5.59, which again will add, if it does come out as forecast, then it's going to force Yellen even further into increasing interest rates, because she's basing everything on the jobs data, as the rest of it is pretty poor, but we'll see. And then finally, in the implied volatility, 1375, or slightly yesterday because of that 87 point drop. Well, it was 87 points on the trade, but the 100 point swing to the downside there. So you can see slightly increasing there, which you'd expect as the market move lower in the background makes the put options slightly more expensive. Right, that's it from me for today. As ever, thank you for your support, also for watching. I shall see you in the next one.